Today, CPI is still in the gutter. Hello again, it's Martin North from Digital Finance Analytics, one of the latest posts covering finance and property news with a distinctively Australian flavour. According to the ABS, the Consumer Price Index, or CPI, rose 0.7% in the December 2019 quarter. This follows a rise of 0.5% in the September quarter. The most significant price rises in the December quarter were tobacco, up 8.4%, domestic holidays, travel and accommodation up 7.3%, automotive fuel up 4.4%, and fruit up 6.8%. The most significant price falls this quarter were international holidays, travel and accommodation, which was down 2.9%, and women's garments down 2.5%. The 8.5% rise in tobacco was driven by the annual tobacco excise tax increase of 12.5% and the biannual increase based on average weekly ordinary earnings. The indexation was applied on the 1st of September 2019. There was a 6.8% rise in fruit, a 1.0% rise in meals out and takeaway foods, and a 2.9% rise in beef and veal. And this, of course, is all connected with the drought, where conditions are impacting the prices for a range of fresh produce, including grapes, melons, onions, potatoes, eggs, rice and prawns. And the strength in the meat price continues to be the effect of high global demand resulting from the spread of African swine fever in Asia and ongoing drought conditions in Australia. There was a 2.2% fall in waters, soft drinks and juices, which partially offset the food price rises. There was a 4.4% rise in automotive fuels, and that flows through from world oil prices. Automotive fuel prices rose in September up 2.7% and October 4%, but fell in November down 2.1%, then rose again in December up 1%. There was a 7.3% rise in domestic holiday travel and accommodation, and this was driven by price rises in the lead up to the peak summer holiday period, although there was a 2.9% fall in international holiday travel and accommodation, and that is mainly due to the off-peak tourist seasons in Europe and America. There was a 3.7% fall in household textiles and a 1.4% fall in furniture through the quarter. Elsewhere, there was a 1.5% rise in childcare, a 0.9% fall in telecommunication equipment, a 1.3% fall in pharmaceutical products because of a greater proportion of consumers who qualified for subsidies under the Pharmaceutical Benefits Scheme, reducing out-of-pocket expenses. There was a 0.4% rise in new dwelling purchased by owner-occupiers. And new dwelling purchased by owner-occupiers recorded modest growth after 3 consecutive quarterly price falls. Increases to base prices and the reduction in the value of promotional offers for project homes contributed to the rise. There was a fall in utilities, down 0.6%, mainly due to the switch to off-peak pricing in Melbourne for gas and other household fuels. The introduction of new market offers with lower supply and usage charges for both gas and other household fuels, down 1.9%, and electricity, down 0.7%, also contributed to the fall. There was a rise in water and sewage, up 0.6%, and that partly offset the fall in other utilities. And this is connected with reduced dam levels in Sydney, which saw the desalination plant becoming operational, resulting in increased water usage charges there. There was a 2.5% fall in garments for women, and that was due to the sales events through the quarter, including Black Friday and the run-up to Christmas. Turning to education, the main contributors there was secondary education, which went up 4.2%, and preschool and primary education, which went up 2.9%. And the ABS said drought conditions are impacting prices for a range of food products, with food prices increasing 1.3% this quarter, with price rises for beef and veal up 2.9%, pork up 4.7%, milk up 1.7%, and cheese up 2.4%. Both the impact from the drought and lower seasonal supply contributed to price rises for fruit, up 6.8% this quarter. And the CPI rose 1.8% through the year to December 2019. This follows a through-to-year rise of 1.7% in the September quarter. Annual inflation therefore remains subdued, partly due to some home price falls for housing-related expenses. Through the year to December 2019, prices were recorded for utilities down just 1%, and new dwelling purchases by owner-occupiers down 0.1%, while rent price rises remain modest at up 0.2%. At the all-group level, all capital cities recorded a rise this quarter, ranging from Darwin up 0.2% to Hobart up 1.7%. Annually, at the all-group level, all capital cities rose, ranging from Darwin up 0.5% to Hobart up 2.7%. Food and non-alcoholic beverages have risen in all capital cities this quarter, ranging from 0.9% in Adelaide, Darwin and Canberra to 1.5% in Sydney and Melbourne. And lower seasonal supply and adverse weather, particularly drought conditions, are seeing price rises for fruit and vegetables up 3.5% and dairy-related products at 1.3%, while strong international demand combined with drought conditions is leading to price rises for meat and seafoods at 1.5%. Transport rose in all capital cities this quarter, mainly due to price rises for automotive fuel following higher global oil prices. Automotive fuel increases range from 2.3% in Darwin to 5.4% in Sydney. Housing recorded rises in all capital cities this quarter, with the exception of Sydney, which was down 0.3%, and Darwin down 0.4%. Sydney had price falls for new dwelling purchases by owner-occupiers, rents and utilities. Hobart was at 1.2%, and that is the strongest rise for housing this quarter due to strong price increases for new dwelling purchases by owner-occupiers and by rising rents. Now, the trimmed mean, which is seasonally adjusted and excludes extreme moves, rose 0.43%, holding the annual rate at 1.6%, well below the target of 2 to 3%. The market was expecting a 0.4% rise in the quarter. In the quarter, the weighted median lifted 0.36%, which is 1.3% over the year, with tradables up 0.2% and 1.7% over the year in December, with tradable goods up 0.5%, mainly due to automotive fuels up 4.4% and fruit up 6.8%. Tradable services fell 2.8%, mainly due to international holiday travel and accommodation down 2.9%. Non-tradables rose 1% over the quarter and 2% annually. Non-tradable goods rose 1.3%, mainly due to tobacco up 8.4%. Non-tradable services rose 0.8%, mainly due to domestic holidays, travel and accommodation up 7.3%. So standing back, we continue to see the official CPI reporting significantly below the 2 to 3% RBA target. Now, of course, in practice, you know and I know that many people are experiencing much, much higher costs of living than these CPI numbers, but nevertheless, policy is based off these artificially low numbers. And it's worth remembering, once again, that the proxy rental calculation for housing, which is in the numbers, means that as rentals slide back, the costs of housing fall, when for many people, in fact, the costs of housing are continuing to rise. So this takes us to a simple conclusion. The Reserve Bank is going to be concerned about the low level of CPI, and this is putting more weight to the argument, therefore, that they might cut cash rates again when they meet next week, although I think they may well wait, given the fact that the employment number was a bit stronger than some were expecting, and there are a whole bunch of moving parts, including the $2 billion for bushfires, which could be regarded as stimulatory, and of course the current issues relating to the virus and other issues. Generally, the RBA is on the back foot rather than the front foot, so it is more likely, I think, they will wait rather than move. I'm Martin North from Digital Finance Analytics. Many thanks for watching, and I'll see you again next time.